Hey guys, this is Nick does DGI, and welcome to my channel, where I cover all things personal finance, stocks, and real estate. I know it's been a quick minute since I last uploaded a video, but I am back in action. I have a lot of video ideas in the works, and I hope to bring them to you soon. But today, I want to provide my monthly dividend income update for the Nick does DGI portfolio on M1 Finance. So let's get started. We finished the first month of 2021 in crazy fashion. We witnessed yet again another presidential inauguration and transition of power. But it was really the last few days of January when it became an interesting time to be invested in the market. At this time of recording, we are in the middle of a much publicized event of individual retail investors/traders battling the enormous and often secretive hedge funds. Your classic David versus Goliath moment. In the battleground arena is in a company of yesteryear that is GameStop, ticker symbol GME. In the subreddit Wall Street Bets have been monumental in gathering broad support for the little retail investors against these hedge funds that were caught heavily shorting GameStop stock to the amount of 140% at one point. This frenzy over GameStop has spread over to other shorted companies such as AMC, Fubo, BlackBerry, and Nokia. And I can really go on and on about what is really going on right now, but that warrants a separate video discussion. Interested? Comment down below if you would like to see that video. But for those of you curious as to where I stand, I am merely spectating from the sidelines. The stocks previously mentioned have seen extreme volatility with up and down swings, and that is simply beyond my risk tolerance and investing profile. I remain committed to investing in stable blue chip dividend growth paying stocks. And with that said, let's head on over to my M1 Finance portfolio and see how much in dividends we received for the month of January 2021. At the time of this recording, the Nick does DJI portfolio is sitting around $10,063. I am so proud to announce that we hit the first portfolio milestone of $10,000. This means that I will finally be eligible for M1 Borrow, which will allow me to take out up to 35% of my portfolio value at a historic low 2% interest rate. Once this feature is activated on my account, I will make a separate video documenting how to take out money using M1 Borrow, aka essentially on margin, and reinvest that back into this portfolio. And once again, this is M1 Finance. If you are actively looking for a new brokerage and are a long-term investor, I encourage you to check out this platform. If you are interested, please use my referral link in the description below. Until the end of February, if you use my link and fund either $100 to your individual account or $500 into your retirement account, we each receive $30. If you are to put in $100, then that is a 30% rate of return, and it doesn't get better than that. But for the month of January, we were paid out a total of 9 times. On January 5th, we were paid out once from ticker symbol KMB, Kimberly-Clark, for a total of $1.22. On January 7th, we were paid out once from ticker symbol PEP, PepsiCo, for a total of $1.15. On January 15th, we were paid out 3 times from ticker symbols ESS, Excess Property Trust, for a total of $1.83, ticker symbol O, Realty Income, for a total of $1.33, and ticker symbol WPC, WP Carry, for a total of $2.79. On January 22nd, we were paid out once from ticker symbol SPG, Simon Property Group, for a total of $2.79. On January 27th, we were paid out once from ticker symbol CMCSA, Comcast, for a total of $1.01. Lastly, on January 29th, we were paid out once from ticker symbol MAA, Mid-America Apartment Communities, for a total of $1.95. And in total, we were paid $15.40 in passive dividend income. This is absolutely passive income for simply investing in these blue chip companies, and with these dividends reinvested and compounded, my future monthly flow of dividends will pay for my lifestyle 20-25 years from now. So I use this portfolio tracker on Google Sheets to help me document and visualize my dividend growth progress. In the first monthly column, it lists all of the dividends received by company. January was a huge month as far as contribution goes, as we put in over $3,000. And moving forward, the amount of money I put into this account will vary month to month based on the household expenses that needs to be paid out, but I aim to put in at least $1,000 each month, and this portfolio earned me 10 cents per work hour. I started to track this metric to help me think of my monthly dividend income as a passive side job, and I hope to grow this dividend per work hour figure to 35 plus per work hour. And all I can say is that we are off to an awesome start on this dividend growth investing journey. As you can see, we started this account this past September, and we have managed to get this portfolio up to $10,000 with a projected annual dividend income of $306. I can't wait to continue contributing and let those dividends compound. And remember, despite all of the recent hype in the news, long-term investing is a marathon and not a sprint. Lastly, I want to go over the first part of this email that I received from M1 Finance yesterday. Today is a great day to be a long-term investor. Short-term noise and volatility can be distracting, and it can make it difficult to stay grounded and focus on what matters most. Having a long-term mindset helps, and etc. and etc. I wholeheartedly agree with the statement that having a long-term mindset will help you stomach days when the market is down 1, 2, or even 3%, as we have seen from the March COVID crash last year. But knowing that you are buying the same stock at a discounted price should motivate you to buy even more. Take this analogy for example. There's a sweater you really want that retails for $100 and you are planning to buy it this upcoming weekend. However, on Friday morning, the store decides to offer a flash sale 25% off. Without hesitation, you would still go into the store and buy it for $75, right? But why is that concept of buying something on sale difficult when applied to the stock market? As long as you are buying quality companies, this roadblock is purely mental, and a shift in mindset will go a long way. Please note that this video is not intended as financial advice, nor am I a financial advisor. Past performance is no guarantee of future results. With the recent rise of IPOs, EV stocks, SPAC plays, and more recently so-called meme stocks, there are a lot of content online, and unless that content creator has a background in financial analysis, please take everything with a grain of salt. Please do your own research and due diligence when deciding to invest in investable securities. And I'm just an ordinary guy posting his opinions onto YouTube because I love stocks, dividends, and personal finance. If you found this content useful, please consider clicking the like button and subscribing to my channel. This helps with the YouTube algorithm and get my channel noticed. Hit the bell notification to receive the latest video alerts as to when the next video will drop. Let's make 2020 your year. Take care.